Good afternoon, Scott Redler, T3Live. Welcome to today's recap. So another gap up today based on the fact that the ECB might be putting in $1 trillion. Plus, they say that they might double their bond buying as long as on Friday everything goes just as planned. Just so all 17 nations agree to cut austerity, they all agree to ramifications if they don't, they all agree on the terms, they all agree on maybe changing the treaty. So there's a lot hinging on what goes on Friday. So with the market up, I don't know, 8 to 9% in the past week or so, all with gaps, all with really no participation from people trying to play intraday, it makes it a choppy environment. Then today you get the news that S&P might downgrade all of the European major countries or banks or whatnot, and that's when you had your little failure midday, which makes it hard to trade because by the time you build some confidence that we're going to keep going, then they break you midday, and you better have a long-term time frame if you want to sit there. As a trader, who's not that committed on the longer-term basis, it's been a little hard to handle, and rightly so. It's across the board. But overall, the macro picture technically looks higher. It's just how do you want to maneuver to get there? How micro do you want to be? How macro do you want to be? So if you look at the chart of the S&P, you'll see where this is the spiders. Really a big move, obviously, from this level. This was at 61.2% retracement. Now you had your reversal low, into 1292, the wedge that broke to the downside, a nice move back up to this resistance area. And then today, it didn't quite jump through the 200-day, but they didn't let it fall apart. To me, I think this range or this pattern I'm trying to foresee needs one more day, a day that opens up down and closes strong. Not another day where we gap up and people are pissed and people don't want to be involved. So, I'm kind of on a micro level. I'm a little bit short. I'm not going out short, through the yin yang or whatever you want to call it. But I do think that a few more days of sideways action and some type of perhaps 8 to 10 handle down move would be nice, because then I do think it would be a place to cover your shorts and potentially get long for a stronger candle into what then could be another move higher. We're holding up here. You still have the gap. The moving averages are trying to catch up a bit, and it was just a little, two ways. It's hard to use your gut, to forecast the market, because those on my radio today were like, oh, this is the same exact day as Friday. We're going to close on the lows. It's done. And I was on the radio. I'm like, you know what? I'm like, when do we really do the same thing twice? What are they going to have? 2 huge topping tails in a row? So just be careful if you want to be short, being short in the last half an hour or so, because they could easily close us back up, and then maybe tomorrow, open us down a little bit, and then lo and behold, the end of the day, the spiders went up $1. So anyone who wanted to be short got squeezed out. People are a little comfortable long. So now, if you try and use your little trader intuition to maybe tomorrow, they open down and it'll be viable. But anyway, if you look at the 5-minute chart, you'll see what I'm talking about. First is this long, sideways move that people tried to trust. And then once you had, this wide range bar break on that news, you had to shake things up a little bit. And then if you remember, we started talking about this little inside range. I think the spiders for them, it was like one, I'll put it, actually, let's do it with the spiders. Spiders was right here, right around that 126.20, and then like 126.20, and then that 125.70 or wherever it was, somewhere like this, whatever it was. This was your opening range. Finally broke a bit, a little bit of a bear flag down here, and then you had some continuation. And this is when people were saying, I'm going to lean in short. And I'm like, you know what? I would not lean in short, just because people didn't want to lean in short on Friday, so now they want to lean in short, and then you get a little bit of a pop-up. That's just some of the Jedi mind tricks of the market after doing this for so long. People emailed me on the side, how'd you know that we were going to rally into the close? Or I'm like, I didn't really know, but it was just a thought based on how the market's trying to prove everyone wrong. So with that said, again, difference between micro and macro. So on the macro, I do see some topping tails in a few of the key stocks. I see a few potent down days, but it's no cause for like run for the exits, but tidy things up. So if you go take a look here, like just something that's a little concerning to me, not a lot, but this is MasterCard. I was talking to Deb today, and I said, you know what, you probably don't want to buy MasterCard at the highs. It's not really been rewarding you. You want to buy on a pullback to test a breakout. So we'll see how this handles it tomorrow. But 2 down days as the market had 2 strong days, maybe some money's leaving. MasterCard and Visa, both of these have been like a contrarian play. Not a contrarian play, but a different play versus the financials. Visa strong all year. Throw out JP Morgan, Morgan Stanley, Goldman Sachs, Bank of America, all of them. And now those stocks are getting some attention, from the bottom feeders, from the January effect. And maybe these, are just drifting lower. So if you look at Visa also, it too came right back to retest this area. Still above all the moving averages, still above the breakout, no cause for concern, but 2 days off. So just see what that leads to. On a macro level, every time it's done this, it's meant absolutely nothing. Just continues higher. On a micro level, just watch a little bit. As far as guys even saying, look at IBM, look at that topping tail on IBM. Yes, short term, that looks like a pause. But again, a lot of these short-term candles keep getting taken out. And IBM, I do think, goes higher. But from here, if you're trading it short term, it's tough because this is, in my book, this is a shooting star, right? You have a open and go through the highs, squeeze everyone out, come back lower. But look, it's still above this recent breakout area. It's still above all the moving averages. It just came from 177. So why wouldn't it sell off a little bit? It can't just be a runaway train. But on a short-term basis, if you had no thesis at all, you would say, you know what, I should be out of IBM and maybe be buying it back around here. But the market hasn't given you that trade yet. So if you are long at tier 2 or tier 3 and maybe you bought the dip, you traded it here, you looked for momentum through this high, then it's a little bit of a sell signal. As far as Apple, got a lot of people's number today. The easy short would have been, if it would have held this like 394 area. So instead of doing that, the market's giving nothing away easy. It pushed through up to the price point. I had 397, went to 396.41, and then it reversed. So you have the calculated trade from the 200-day to breaking this mini, downtrend. If you remember, I drew this descending channel here, and descending channels typically, get broken to the upside, and it happened. So it was a nice trade into resistance. So you go to your 5-minute chart, you can see it a little bit more clear, but or maybe not. This was the move. This was that move we tried to fade. Just said, okay, not happening. Got out of the way. This is also people who tried to short it. Just said, Then came back up, made a lower high, and then I guess if some were telling me that it broke the wedge to the downside in the afternoon. That's why it gave you a short signal around 1:30 right here, and then if this was your short signal 1, I think I got involved right around here when it broke below this prior pivot. Gave you a quick move, a retest, then it gave you another move lower, and then I think I was done with it around here, and then just like the market, it had a bit of a move back up. So tomorrow we'll see how we open. We'll see if it opens down to see how it handles the low here or this low, or if it opens up, does it stop at this resistance or maybe this resistance. But for now, it's been a decent trading vehicle, and for investors who are staying the course, you had to go through a bit of a pullback, but right now it's been a nice snapback, and I drew that long-term line to said watch out for that. Institutions longer term should defend it, and they defended it. And now this is one of those other points where you got to see if it could get back above this resistance. So at this point, as an active trader, the compelling snapback long is off the table, but there's no reason why just to blindly short it. Amazon is still weak. Amazon, is really not doing much. It was negative. It gave you a little day trade, went back down. It's below the moving averages. It's just churning around, and it's been broken ever since these earnings. Last tradable pattern was this sideways move when it resolved to the downside, and a lot of things are snapping back. Like you saw Apple snap back. Apple, if Amazon was just as strong as Apple, you would have seen Amazon already snap back probably to this 210, which it didn't. So it's showing relative weakness. Today, there was a nice trade in Netflix. Just shows you how another man's trash could be someone's treasure. It's down in this lower range. It had a little bit of a volume bar, a level down there around 68, 69, and it went to 71. It was a nice day trade. Had a few different trades along the way, depending on if you overtraded. I overtraded a little bit and went after it 1 or 2 times at the highs, so I didn't do as well as some of the others out there. I think Sperling had a really good trade in Netflix, I'm sorry. So if you look at the chart, according to the chart, you don't see much, except for it is trying to get above this little spot after being absolutely annihilated from the breaking of that uptrend around 220. But you can see it a little bit closer on the 5-minute, where you had it opened down, And I think this was the first spot that we got involved in it as it traded, back above Friday's high. And this was your first move, and then it went sideways for most of the morning. This is where some guys that missed the first part of the move got involved around 69. And then it was a nice straight up trade all the way to about 71 and change. And then as I'm not even looking at what happened here, but if I was long this and I was here at lunchtime, I would have said once it broke below this area, potentially get out of the way if you were trailing it. So, trade number one, trade number two, needed to consolidate, wasn't sure, and then here it just squeezed all the way up. And I guess if you look here, this is when it started to break the range, and then this was really when the market came in. So tomorrow there might be another trade. We'll look to see how it opens, and we'll look to see if it could, start to, play some catch up. Maybe tax loss selling's done here. Maybe that hedge fund guy, whatever his name is, Tilson, something or other. I'm kidding. I know his name. Buys some more, and it goes to this moving average of 76 or maybe even 94. It could be a good January effect type play, considering that everyone just abandoned it because you look at the move it's had ever since it broke the uptrend, which created a new trend right around here. Now listen, there were a lot of shorts calling for it to short this whole way up. Just shows you that you may not be able to stay solvent until the technicals catch up, and that was right here, well before some of the news started hitting. We saw that taking place, and that's why you want to use technicals. As far as some of the banks, Goldman Sachs, strong day today. I think I drew this point this morning, saying as long as it stays above this 96, you could see some commitment, and now it's building another flag. I'd like to see it go sideways for a day or two, and then maybe you could add above 102 for a move higher, maybe even just back to where it was in October, this 110 range. That could be a good little trade for us. JP Morgan also, nice day. This is actually even stronger. This actually took out the high from Friday. So the nice move in the bank. This was the pivot that we drew way back when, and it's into resistance, and good little trade there. Bank of America, it could still be on its road to 614 or a little bit higher. OAHs, still building the right shoulder. Small little days here. I think it's going to take some time, but this is going to be something to watch for 2012 as some money is coming into these names. They have a lot of earnings in a lot of them, like $4 or $5 depending on what it is, and the P's are low. So this could be a group that people are looking for like a undervalued longer term play, even with some of the industrials also. See what the industrials did today. Not bad, but just that's why it's a little hard to trade these things, because look at this little choppy 3-day action above resistance. Usually you want to see a move like this through resistance. You want to see power through resistance. Not these little just wimpy days here. But what could you expect after such a move from the lows? And that's why people are a bit frustrated, because it's not the action like we want to see. Why couldn't we open down today? 8, 9 handles and close up 12 handles. That would have been a great active trade, instead of opening up 17 handles and then being only up 5 and then closing up 12. You have to be a surgeon, and you have to be really easygoing and low key and not overtrade, because it's very easy to get frustrated. I think Mikey had a good call on this INHX. Actually closed, wow, it closed off those lows. It was a decent trade. Where did it go down to when as low as 14? That's exactly what he's saying. Not bad. I think some of us were shorted. I know I was shorted like, I think 15, 20. But there wasn't a lot of volume, so you really couldn't sink your teeth into it. Really, when it started breaking below this 15, 20, it gave you a decent short if you were just holding it with other things. That diamond got me good today. It was horrible. Yeah, there it is, Diamond Foods. Let's go to the daily. I was trying to, after playing Netflix into the gap or up, I was like, here's another bottom feeder. But I would just keep it on the radar still, just because it wasn't ready today. Maybe above 40.10, you get a bit of a trade, into that gap. It's been annihilated. But don't do it or don't anticipate it. Make sure you see volume. Gold was very weak today. I wouldn't put too much into it. It's just been really in a void, except at extreme spots. It's not an extreme spot, except for just broke this little support. So, see how it handles this 165.39. And that's really it. So it's another day down, another big gap to the upside. I know it's frustrating for people, but Sperling's been coming in pretty flat, and he's been able to manufacture some nice money. A lot of traders, Mike's been coming in flat. He's now up 7 days in a row. There is money if you're thinking clearly and you're not frustrated. Myself, I've been a little choppier because I've been trying to hold macro moves, and for me, it's been a little difficult being in the media, being everywhere around, where as if it's hard to keep those positions on. I've been basically net long since Wednesday's flip. You guys remember that flip that we did at that 1240, which was a big thing for people. Okay, those spiders just say. And I was talking to a guy at lunchtime. If you look at the spiders, this was the day you had a big decision to make. This was the day that it gapped up and continued. It was hard to see these 2 days, and then actually no, this was that Monday, Tuesday, and then this was the day you had to say, I'm either going to fight this short all the way up, or I'm just going to flip gears, get out of my short. The news is pretty big, and then see if I can manufacture money from the long side. So this was that day, the day to really figure out if you're going to be stubborn, figure out if you have a long-term thesis, and you had some time to cover around this 124. And if you did so, you're not as in harm's way as you would be as if you were fighting this. And at this point, I know I went home a little short, but I'm an uncommitted short right here. I'd rather see you guys being long the strongest stocks and ready for this breakout above. But we'll see how it transpires. Anyway, so trade in your means. Know your time frame, and there's action to make you some money. Just only going to see it if you think clearly. Tomorrow's Jill's doing the morning call with me, so tune in. We'll go over a lot of the action, and then on Wednesday, Stephanie and Alex will be back. Once again, Scott Redler, T3 Live, the recap, see you at the morning call. Have a good night.